How much money do I need to buy a home? The answer is coming right up. Lots of questions about how much money do I need to buy a home? There are a lot of misconceptions out there. Many people, especially millennials today, think that you need 20% down to buy a home. That is simply not true. At 20%, even an average home of $200,000 would mean that you would have to dish out $40,000 plus your closing costs. So let's go over some options. There are three types of loans: conventional, FHA, and VA. Let's start with conventional loans. On a conventional loan, it would be better if you did put 20% down, because you would save on the PMI. What is PMI? PMI is private mortgage insurance, and that is put on a loan when you don't put 20% down to guard the lender. It protects the lender and the banks if you stop making payments, but you do not need 20% down. There are conventional loans for first-time home buyers with as low as 3% down. That's a great savings. If you are investing, conventional loans, you would only need to put 15% down. Of course, there are different circumstances to this, so the lender would be the one that would help you through that. Let's talk about FHA loans. FHA loans are probably the most used in the US. Why? Because you have to put down 3.5%. Now, keep in mind that FHA loans do have a mortgage insurance that's called MIP, Mortgage Insurance Protection. Again, this protects the lender and the bank if you stop making payments. There is an upfront fee that you have to pay. You can pay it all in cash, or it can be rolled into your closing costs. And then there is a monthly mortgage insurance premium that will be added on to your mortgage rate. Sometimes it could add up to $200 extra a month on an FHA loan. Let's talk about VA loans. After all, San Antonio is Military City, USA. So there are a lot of veterans. So if you are a veteran and you want to use your VA certificate, you don't have to put any money down. If you qualify for a VA loan, there is zero money down. However, there is what is called a VA funding fee. What is the VA funding fee? It's kind of similar to the mortgage insurance. It protects the lenders and the government in this case. If you stop making payments and go into foreclosure, the loan is still being paid by that mortgage insurance. How much is the VA funding fee? If it's the first time you are using it and you are putting less than 5% down, of course, if you're putting 0% down, same thing, it could be 2.3% of the loan you are getting. It can go up as you utilize it more times, because VA loans can be used over and over if you don't have an existing VA loan. For example, if you are living in another city and you have currently a VA loan, you sell that home and you move to San Antonio, you can use your VA loan again. Keep in mind, you can only buy one home with your VA loan. So those are the three types of loans: FHA, conventional, and VA. Please keep in mind also that there are a lot of down payment assistance programs right now that you might not even have to come up with a down payment. The government sometimes has programs to help those that need to buy a house or want to buy a house, and they give you money for the down payment. All of these things can be discussed with a preferred lender, and I do have one in case you need it. The other thing right now to keep in mind about buying a home that you don't need as much money is the low interest rates. I know we keep talking about how low the interest rates are, but for example, if you were to buy a home a few years ago when the interest rates were 5%, that's going to add an extra $200 to your monthly mortgage. So with interest rates being below 3%, it makes housing more affordable. That means you can buy the home you want. If you have any questions, reach out to me. Let's discuss your home buying options. And please don't forget to like, comment, and subscribe to the channel. We have new information every week. See you next time.